Hello, hello. A new week just started, November 22nd. We will take a look at the usual markets that we trade, starting with our favorite, the Dow Jones Index. Some traders asked us last week that which instrument you are trading, is it the futures or the CFD? In this example, in this analysis, we always analyze the CFD data because we are trading the high leverage product at the moment. The same analysis holds true for the futures. There is no major difference. So this is US 30 CFD price trading at 35,741. If you are a futures trader, you go to this symbol. And the price has a minor difference here that you need to take into account. But the overall bias remains the same. If it comes down to the exact price level, that you need to make sure that you are looking at the same instrument. But for us, at the moment, we are only trading the CFD and not the Dow futures. However, Dow futures real time is much better for intraday trading. If you have a large enough account. If you have a small account and you want to trade the same with futures, then you trade the CFD because of the leverage, which is 1 to 30. So let's go back to our Dow Index US 30. Okay. All right. I will clear the previous drawing because I want to do it from scratch for teaching purposes. Where do we stand in Dow Jones? What is currently happening this Monday and what to expect for the next days? So Dow made a new all-time high in October, and it broke the structure, and we are retesting that structure again as a support. I wanted to stay on full screen, but it just doesn't show me the tools. So this was the previous resistance area, structure point that the market broke and made all-time high, and we are retesting it in a pullback, which is a classic breakout and pullback retest setup. Since this market is in a secular bull trend, we only tend to buy pullbacks. As of now, they have worked. This strategy has worked. So we will tend to repeat the same strategy until it stops working. Also, the black line is the 200 moving average, simple. We were looking at this level on Friday, where the market was trading close to the 200. So it was trading here. It was very choppy session on Friday. We tried to sell multiple times and got burned on the shorter time frame. However, the target was met late when the session closed, and the price afterwards bounced off, and we are here at the moment at the daily pivot, and the analysis goes like this. We start with the extension from the swing high to the swing low, and we will measure the move against this bounce to know how far the pullback goes to the downside and where is the next bottoming point in Dow Jones. So first, in order to draw an extension, as we have taught in our training sessions, we need 3 points to find the ninja targets. So you have the swing high, 1 point, 2 points, 3 points. This brings us to the Fibonacci 100% extension followed by the 161% extension down here. Since we have tough support at this area, we tend to look for a buy here. Unfortunately, we missed on Friday, but we will be looking for another pullback today during the US Open. Since we're trading the London now, nothing much is happening. We are looking for a pullback to the extension once again, or to the support, to see if it will hold or not, and then probably a retest of the weekly, which is not tested yet. Monday, this level will be validated in Friday, and we'll see if price will hold pullback today in order for advance higher. If this pattern were to be a textbook pattern, then in the next very short term, if support box hold, Dow Jones needs to make all-time highs. So that's the short story. Dow Jones holds support, goes back, and makes all-time highs. Short story. How do you trade it as an intraday trader? That's the long story, where you need to dive deep into the technicalities in the short term, movement, price action, tools that we use, and as such. So let's try to look at 1 hour. Okay, same story. We have reversed Friday's price action. If today we will protect gains from Friday or the pullback to the golden zone. So if any pullbacks that is going to come later on to this Fibonacci area that we just drew holds, that would be a perfect buy entry. We need bullish momentum candles, full body candles to follow the buy. If not, if the golden support here is broken, then price will probably decline farther and may challenge the 200 moving average and could probably sell off towards the 161.8 extension down here, which will make the pattern quite challenging and interesting. Volatility will be high, VIX will shoot up probably. That will be a considerable sell-off for the short term, and the media will speak of it, which could probably become a bottom area at this zone. But for now, we are not preparing for this case. We're preparing for buy the pullback case. And if, again, if the pullback doesn't hold, we will shift towards the sell trade later on during the session. So that is all regarding Dow for now. We have some other charts here which are a bit more advanced, and these charts are used mostly in institutional trading and in some hedge funds. I'll not explain it too much, but yeah, it just shows that Dow has support at 35,650. If we hold the 61.8, which is a key volume area from Friday, a massive squeeze to the upside will follow through. If not, then market will challenge this support, will trigger stop losses from some swing holders, and hopefully it drops to 61.8 extension, so we can buy again there and probably short the momentum to the downside. Dow, that is done. Nasdaq, very less we can do here, very little we can do here. It's just a strong uptrend. So we were tracking this move. Talk a bit about Elliott wave pattern. So this was a 1, 2, 3, 4, 5 pattern, leading diagonal in Nasdaq 2 weeks ago. Therefore, we have a wave 3 micro extension to all-time highs. We will start the extension connecting this wave with this low in order to get the next target in Nasdaq. So you see the train is still riding. We need another 150 points to reach the first target. Buy all pullbacks, dips in Nasdaq remains the strategy if we hide the moving averages. Okay, let's keep the 50 because that is probably Friday's consolidation, and that would be a decent pullback to buy later in the day in case it comes. And if it holds, not if it holds, but usually it's the first time of the 50 and we want to buy, so we will buy there and look for this pattern to unfold. Afterwards, stop loss is below, a few points below. And try to hold the trade for long term. We had a buy position at this area, but we closed a bit early at 350. We wanted 500, didn't hold, and we missed another entry because didn't give them a chance to enter again. We'll see today what happens, but quite bullish market in Nasdaq, way more bullish than Dow Jones at the moment. The tech sector is quite strong. We will not be concerned about major sell-offs as long as price maintains ground above the 16,450. This could be the triggering point for further sell-off. As long as we are above this area, we'll not even think about a sell. Therefore, we are buying pullbacks, dips later on if they happen, or we will not be trading Nasdaq in case no dips come. Moving on to gold. We wrote a piece for investing related to gold last time. So gold prices at the mercy of the US Fed. For some of you that read the article and or for the traders that are in our trading room, they already know that we are expecting gold to unfold into this triangle pattern in the coming months, maybe until the start of new year. It looks like we have a top in wave D in place, which should be a perfect case scenario. And from this moment forward, we simply need to see the gold prices declining farther towards the next support zone, probably 1812, the next area, followed by the 1760, which may be later in the month. It also depends on the US data, USD data, the inflation next month that we will get, retail sales, what the Fed will say. But up to now, if gold does not have a promising future, as long as the inflation remains concerning, not only inflation, people are a bit confused here because gold and dollar, they went up together when the CPI came at 6.2%, quite a high reading right here. But in theory, it should have not gone up. If the US data are positive, gold is negatively correlated with dollar. Therefore, it should have gone down. But gold is, most investors are looking for Fed clues. So if the inflation is high, but in low interest rate territory as we are right now, gold goes up at the same time as the dollar momentarily goes up. So it's all about the interest rates. If the interest rates are low, dollar is not that strong in the medium term. It's just strong for the moment now because of some other news, but the interest rates are still low. So it's a deflationary situation. The currency of that market is not in a hawkish environment. And therefore, dollar thrives because it's a low interest rate territory. If the central bank later on increases the interest rates with the high inflation persisting again and again for the next quarters, gold will not have a good future. It's just not going to be the investment for big money to put the funds into. With high interest rate, gold will suffer. Whatever happens with the inflation, just high interest rate period with gold will not be helping this asset. Therefore, the price could probably decline back to the 1500 area if we see increased interest rates in the coming year. If we have 3 interest rates hikes, The moment the Fed says that the interest rate will be increased because of 1, 2, 3 reasons, gold prices most likely will decline substantially. But this was just a fundamental talk. We will not trade gold intraday. It's very tough, very difficult with stop losses. We'll see if there is a clear setup that is worthy of a trade, but for now, nothing. A quick look at pound dollar. There is a large trader that is holding a buy position in pound. I don't know why, but I got an email on Saturday about the pound dollar, and he was saying where is the next support area in case we continue to sell off again. Pound against the dollar is the same story. In case the interest rate are increased, and if the inflation continues to be persistent, pound will not have good returns compared to the US dollar. Technically speaking, the pattern does not favor buyers. Look at this. We're holding below the golden resistance. This previous bounce was a clear ABC pattern that reversed right at the 100% extension, and then a big sell-off started immediately after. This is a downtrend short term, even medium term, and therefore you need to follow the trend. Every bounce that happens to a key technical level is seen as a short opportunity, and you need to follow the trend. The same as we do with Dow Jones, buy the dips, or with Nasdaq, buy the dips. We need to do with the other markets that are in the downtrend. You have a downtrend, you have a bounce to a technical level, you need to sell it, because chances are that that trend will resume compared to that trend being broken. Breaking trends is not easy, it takes time, and it doesn't happen within 1 week, usually. So for pound dollar, we say only one sentence, one condition here: as long as price trades below 134.80, careful buying, or put a stop loss in your long trades. So if you want to buy here, there is no reason for us. There is no reason to buy, because it's tough. You don't know where to place the stop loss. You can place the stop loss randomly 30 pips below the current market price right here. That could work, but for us, okay. So here is a support area 34.13. If you buy now, put the stop loss below 34, like 33.95, for example, and take your chance. But it is best, the higher success rate is on the trend trade. So we believe that pound will continue to drop later on towards the next Fibonacci level that we have here, extension. Let's delete this and take a look. Where is the next level that we want to buy? Okay, it's the 33.10, 33 area. Okay, the pattern that we have labeled here is a classic ABC, ending with wave C in expanding diagonal. In order for this pattern to play out, you just need another decline towards this microwave 5 to at 33.10, and the stop loss for the short 34.80. And that's a wrap, guys. If you want to read more about the gold article, go to investing.com and search about my piece, or just follow us on the website at Impulsive Wave Trading. Join the room, read the educational blog posts, try to learn as much as possible. Trading is not for profits, but is for account preservation first, especially if you are a beginner. And it's all about mindset if you are an experienced trader. So as for a beginner, protect capital, profits will come. For experienced traders, the ones that work with us constantly, it's a tough job. It's all about mindset. Good luck this week. We'll catch up again in the next session. Bye.